Good afternoon, friends. Satyampada Dharmachara, Satyamev Jayate. Welcome all of you to the news desk on income tax, GST and corporate law. Let's start from the income tax. Bangalore Tribunal Assessing Officer cannot adopt net asset value method to determine value of the share of a company if assessee use discounted cash flow method for the same. In this case, Bangalore Tribunal held that assessing officers should scrutinize the valuation report prepared under the discounted cash flow method, and if necessary he can carry out fresh valuation either by himself or by calling a final determination from an independent valuer to confront assessee. He cannot change method of valuation and he has to follow discounted cash flow method only. Where the assessee company engaged in the business of the manufacturing of the energy drinks had issued shares at a share premium, but assessing officer took view that share valuation under DCF method had been carried out on basis of the projection and estimation given by management, and that value of the shares should be based on the net asset method mentioned in Rule 11 UA, and accordingly assessing officer work out value of the shares under net asset method and assesses excess in share premium as income of the assessee under the head income from other sources under section 56 subsection 2 7b. Since assessing officer had proceeded to determine value of the share by adopting different method without scrutinizing valuation report furnished by the assessee under discounted cash flow method, matter be remanded to file of the assessing officer with direction to examine said issue afresh. In next case, Madras High Court dismissed writ as assessee had alternative remedy of filing appeal before Income Tax Appellate Tribunal. Where writ petition filed by the assessee against order of the transfer pricing officer passed in consequence of the direction given by the dispute resolution panel was dismissed as premature on the ground that there is an appeal remedy available to the assessee before tribunal. Said order could not be interfered with, an assessee is free to raise all objection before assessing officer and then before tribunal in manner provided under law. It was also held that a regular appeal on substantial question of law under section 260A is provided in the Income Tax Act 1961, and on question of the law, if at all they could arise from order of the tribunal, assessee had a remedy even before the High Court and later before the Supreme Court on regular appeal. This streamlined procedure provided under the Act should not normally be allowed to be breached in such cases where a deeper analysis of the facts has to be done by authority under the Act up to a tribunal, and a factual exercise had to be undertaken by them with regard to comparable transfer pricing adjustment and method for making transfer pricing adjustment as prescribed in Rule 10b and Section 92C. Prematurely pronouncing on these issues definitely curtailed discretion of assessing authorities in this regard, and it is a self-defeating exercise with High Court in its writ jurisdiction should be reluctant to undertake. Next case, Bangalore Tribunal, depreciation on admission fees and processing charges paid towards membership of the stock exchange is allowable under ITAT. Membership in a stock exchange by assessee creates intangible right in its favor, hence depreciation is to be granted towards admission fees and processing charges paid for said membership. Next case, Madras High Court, no disallowances of interest paid on a loan taken from the relative if they duly disclose interest income in their income tax return. Where assessee claimed under section 57 subsection 3 clause 3 on interest paid on the loans taken by it from its relative, since assessee had specifically stated that loans were availed through proper banking channel and interest amount were paid to lenders who had disclosed them in their respective return of the income, and tax was remitted by them on interest income, revenue was unjustified in disallowing assessee claim for deduction under section 57 subsection 3 in respect of interest paid and thus matter was to be remanded. Next case, Madras High Court. Madras High Court remanded matter as ITAT didn't adjudicate issue of the assumption of jurisdiction by assessing officer under section 147. In this case, where assessee challenged reopening of the assessment by assessing officer and tribunal did not render any specific finding on the assumption of the jurisdiction by assessing officer, tribunal ought to have adjudicated grounds raised by the assessee, that is whether reopening was valid in law, and thus matter was remitted back to tribunal. Delhi High Court discretionary hearing opportunity under Faceless Appeal Scheme challenge before Delhi High Court. A writ petition has been filed before the Delhi High Court with a plea to declare that Faceless Appeal Scheme 2020 is discriminatory, arbitrary and illegal to the extent it provides discretionary hearing opportunity. It was claimed that the right of being heard even through the video conferencing mode is subject to the approval of the Chief Commissioner, Director General, and the same is discretionary. CBDT issued order on 16 October. In the CBDT issued guideline for taking intrusive and coercive action for the recovery of the taxes by the AO or TRO. The CBDT has issued guideline for the assessing officer or tax recovery officer who are authorized to carry out function related to recovery of the arrear or current tax demand as per the provision of the Income Tax Act. The revised guideline comes into effect from immediate effect. Let's cover updates on international taxation. In transfer pricing, Ministry of Finance issued notification on 19th October 2020. In this notification, CBDT notified tolerance limit under the transfer pricing for the assessment year 2020-21. The CBDT has notified that the tolerance limit of the 1% for wholesale trading and 3% in all other cases for arm length pricing determination during the assessment year 2020-21. Wholesale trading means an international transaction or a specified domestic transaction of the trading in goods which fulfills certain conditions. Next case on transfer pricing, Bangalore Tribunal, negative working capital adjustment for transfer pricing study not required in case captive service provider. Companies having turnover of more than 200 crores and up to 500 crores have to be regarded as one category, and those companies cannot be regarded as comparable with companies having turnover of 200 crores. Negative working capital adjustments shall not be made in case of the captive service provider, as there is no risk and it is compensated on a total cost plus basis. Let's cover updates on GST. Advance Authority ruling Maharashtra. Sale of the ready-to-use sand to Founder industry constitute as a supply of the goods. It's just given here. Applicant is involving in promotion of the commercial activities relating to the foundry industry and preservation of the environment. Through its sand reclamation plant, applicant received waste and sand having no commercial value at their plants from different foundries, which is stored at common pool storage location for production activity. Foundries have not supplied goods to applicant for job work, but is only a waste and is not a byproduct or outcome of any manufacturing process. It is not possible to segregate as sand as per the receipt from the foundries. Applicant, by applying different processes on the sand and using it own consumable, brings into existence a new finished product, which is a distinct commodity and has commercial value. Applicant has category started that the activity is an activity of manufacture of a new commodity by using its own raw material and skill and labor, as well as the input material supplied, value of which is nil. The subject transaction undertaken is a supply of the good, that is sale of the ready to use as sand for foundry industry and not supply of the job work services. Appellant Advance Authority ruling Haryana, ruling of IA are no more binding on applicant due to change in tax rate of the solar power generating system. Next case, Kerala High Court, no withdrawal of the assessment order where returns are filed after 30 days from the date of service of the said order. Where the assessee file return after more than 30 days after date of the service of the assessment order via web portal, benefit of the withdrawal of the assessment order as mandated under section 62 could not be granted to assessee. Next case, Kerala High Court, audit is independent of investigation, audit and investigation proceeding to be concluded simultaneously in GST. Kerala High Court held that in an operation carried out by a statutory authority invested with power of the search, inspection and seizure by reason only of such activities having been carried out in residence and offices of any person under investigation for a long time cannot be labeled as a harassment or high-handed. Audit under section 65 is independent of an investigation under section 67 and thus audit and investigation proceedings may be continued simultaneously. An officer above rank of the Joint Commissioner carrying out investigation or enforcement activity can deposit any amount collected by way of the cash, check or demand draft during investigation or enforcement activity, and same does not require generation of forms prescribed. Advance Authority Appellant Advance Authority ruling Karnataka, excess card printed based on the contents given by the customers are goods under tariff item 4901120 tax at the rate of the 5% GST. Madras High Court, credit of the education sales, secondary higher education sales and Krishi Kalyan says cannot be carried forward under the GST regime. Judgment of the single judge says aside Madras High Court. Next, GST under GST notification dated 16 October 2020. In this notification, satellites launch services is exempted from the GST. Let's cover updates on the company law. There is the one judgment, Kolkata High Court. High Court upheld Registrar of Companies' decision to include director in defaulter list, refer division bench for conflicting views. Where defaulting company was in default in filing annual return for continuous 3 financial years commencing from the 1st April 14 till 31st March 17 and petitioner director assel action of the registrar of the company including petitioner in list of the directors of the company who had defaulted in filing annual returns. It was held that petitioner stood disqualified to be a director by operation of provision of section 164 subsection 2A for failure of defaulting company to file financial statement and annual return for period from 1st April 14 to 31st March 17. His director identification number stood cancelled immediately upon defaulting company failing to comply with section 164 subsection 2A of and decision of registrar of company in placing petitioner in list of the disqualified director did not suffer from vice of the breach of the principle of the natural justice. However, since there was conflicting views of the court on same issue, it would be appropriate to refer start writ petition to divisional bench. Thank you so much for watching a news desk on income tax, GST and corporate laws. Thank you so much.